Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the 15-minute time frame, where we're looking at a finished impulse to the upside in a wave 1 or A finished 3-wave corrective structure to the downside in a wave B or 2, and now continuation to the upside to take the high in a wave C or a wave 3. Wave 1 or A is then a 5-wave impulsive structure in blue, 1, 2, 3, 4, and then a wave 5 with inside the blue wave 3 the white count, 1, 2, 3, 4, and a wave 5. Has to be said that wave 4 is quite lengthy in time compared to your wave 2, as you can see. Depends a little bit on where we end wave 4. We could end wave 4 here, and then it is perfectly fine compared to 2, with then a diagonal to start your wave 5 over here in a wave 1, 3 wave 2, and then eventually 3, 4, 5. So that can definitely work. You can see that wave 5 is also quite long in time compared to wave 1 as well as wave 3, but that is not like an invalidation for an impulsive structure, right? So we can definitely count the move towards the upside as an impulse. The move to the downside is then counted here as a double zigzag WXY, 1, 2, 3, 4, 5 in A, 3-wave corrective structure in B, 5-wave structure down in C, inside wave W. Then any corrective structure in a wave X, and another zigzag to the downside ABC inside your wave Y. Wave Y moving towards that 1.618, which is an uncommon target for a wave Y, but it is a target nonetheless, and it found support on top of the daily naked point of control that we had here at 54,375, as well as the 786 that you take from the low over here to the high. I misclicked, so I quickly have to redo this. And then if you toggle on the 0.786, then you can see that that one also acted as support. Now in this case, we want to see price moving to the upside impulsively. So we want this structure to continue. We want volume to increase as well, and preferably price grinding towards the upside with bullish CVD divergences. An alternative count to the downside was an ABC, and the only reason I like to cover this is because I have seen it online and I want to explain why it doesn't work. So we have the same impulse to the upside in a wave 1 or A, but then we have an ABC to the downside with an expanding diagonal in a wave A. Now you can have an expanding diagonal. It is not common, but it is definitely a structure in Elliott waves. But the problem this doesn't work is because of wave 5 in your expanding diagonal wave A. So we then have a wave 1, 2, 3, 4, 5. There is overlap between 1 and 4, so we have to think about diagonals. However, in an expanding diagonal, because wave 3 is longer than 1, you can't have a contracting diagonal. In an expanding diagonal, you then want wave 5 to be longer than wave 3 as well. That is a requirement. However, wave 5 did not go beyond the 1-to-1 trend-based fib extension here on the chart, meaning this wave 5 is shorter than wave 3 because the 1-to-1 is taken from the start to the end of 3 to the end of 4, comparing 3 with 5, and 5 is clearly shorter than wave 3. So therefore, we cannot count this as a diagonal to the downside. We have to count it differently. Now I have checked the possibility of a wave 1, 2, 3, 4, 5 here, labeling this a wave A, for then a 3-wave structure here and another 1, 2, 3, 4, 5 to the downside. So then we have wave B and then wave C. The issue here is that inside wave B, if we take a fib from this low to the high, and we look for expanding flat targets for then potentially a running flat in a 335 or a WXY with X moving below W, price, as you can see, hit the 1.618. And the 1.618 is a rare target for a wave B and an expanding flat, and also for a wave X that would be very uncommon. So that is not really something that I like to do. It just doesn't have the highest probability. So therefore the WXY would work best in this particular case. Now the bearish scenario is that we have a 3-wave structure to the upside. So we count this as a 1, 2, 3, 4, 5-wave move, followed by a B and a C to the upside. Wave C hit the 0.618, as you can see on the chart, taken from the low to the high of A to the lowest point of B. The 0.618 is a target for a wave C, but it is a rare target. The most common target is the 1 to the 1.236. Generally, a wave C is the same length in time and price compared to wave A, which isn't the case in this particular scenario, of course, because your wave C moved to the 0.618, rejected, and moved to the downside. Now, the most bearish scenario is therefore a double 1-2, looking for an impulsive structure to the downside, where you have the blue 1, blue 2, white 1, white 2, 3, 4, 5, 4, 5, preferably. Now, what you can see and what happened during the recording, interestingly, is that price moved to the upside, touching the 0.618 that I have on my chart here. And the 0.618 actually invalidates the white wave 4, because I then take the fib from the high to the low of the white wave 3. And what we're looking for is a 1, 2, 3, 4, 5 to finish the blue wave 3, and therefore start a blue wave 4. And now that price has hit the 0.618 for the white wave 4 over here, taken from the high of 2 to the low of 3, it is invalidated, right? The 0.618 is so incredibly low probabilities for a wave 4, you can use it as an invalidation, which always works perfectly fine since years already on my charts, and you would count this differently. So the fact that we did hit the 0.618 lowers the probabilities for this scenario, where we were then looking for 1, 2, 3, 4, 5, another 4, and another 5. If price can move to the upside and also touch this 0.618 on the chart over here, 56.5k, it would reduce the probabilities even more, invalidated even more. This 618 is taken from the highest point of this blue wave 2 to the low here as well. So in other words, the moment the 618s here are hit and the first one is hit, the probabilities increase for the bullish scenario to take the high, but at the bare minimum continue this range sideways to then reanalyze probabilities at a later stage. Looking at the CVD divergences, price came down on top of the daily naked point of control, creating a bullish CVD divergences, higher low in price, lower low on the CVD, which is something that you can see here on the AGGR chart. So if I zoom out just a little bit, you can see here higher low in price, but look on the blue line, and I think my webcam is actually in front of the line. Let me check. Okay, now you can see it. So you can see the cursor here. The cursor is the horizontal line structure. You can see that the low on the chart had a blue CVD line at this particular level, but right next to my webcam here, you can see that the blue line dipped below that horizontal cursor line. So there is a bullish CVD divergence on the chart, which I've shown with the green line over here. And then just before this push to the upside, we had bullish as well as some bearish CVD divergences. But what we like to see is price grinding up, higher highs, higher lows, and then bullish CVD divergences will get the higher probability because of the local market structure on the chart. The same was true for when price was moving down over here. We have price moving down, lower lows and lower highs, and then we had bearish CVD divergences. And because of the structure, that is of course very, very relevant. Now, we do have some news coming up as well this week on Tuesday, July 9th, 4 p.m., Wednesday, July 10, 4 p.m., July 11 here, also 2:30 p.m. Central European Time, and then also on the 12th, 2:30 p.m. Central European Time. So quite a news heavy week, might increase the volatility on the chart, so make sure that you trade safe. So if you then finally look at the probabilities of the different scenarios, then there's a couple of considerations that I have here on the chart, because it was actually quite tricky to analyze this area, because there's a couple of things going on. We have the consideration over here of a wave C reaching the 0.618, which is a rare target for C. In an impulse to the upside, 1, 2, 3, 4, 5. Wave 4 is long in time compared to your wave 1 and also your wave 3. And generally, when a wave 3 is the extended structure, wave 5 tends to move towards equality with wave 1, meaning quite similar to wave 1 in time and price, which of course is not the case, but there's not necessarily an issue with the impulse to the upside. It follows the rules that we want to see in an impulse. And in a zigzag A, B, C to the downside, the diagonal over here, as explained, is not valid. Wave Y moved to the 1.618, but we do have bullish CVD on top of support. So What I wrote over here is the probabilities would be on the side of an impulse to the upside, looking for an ABC or a 1, 2, 3, which of course would be most bullish, but an ABC on a daily time frame would work a little bit better at the moment. When comparing the longer 5 without much issues versus a wave C hitting the 0.618. Though for more confirmation, hitting the 0.618 on the chart, both of these over here, would be good to see, because the moment you start to hit these two 0.618, the probabilities will increase for price to move to the upside to take out the hype, and at a bare minimum continue ranging or increasing probabilities for a continuation of the range sideways, with which we can then reanalyze probabilities at a later stage once again. As written over here, we invalidate potential wave force to the downside, probability switch to the upside, at least a continuation of the range. Preferably also see price grinding up with continuous bullish CVD supporting the bigger CVD that we have on the chart over here. Now on the daily time frame, of course, we are on a in a downtrend, right? The probabilities on the higher time frames haven't changed. On the weekly, we are still bullish. On the daily, the probabilities at the moment remain higher for price to look for new lows. But locally at the moment here, this is what's going on. These are the probabilities from an Elliott wave point of view, and we will continue to observe the price action locally. That being said, I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.